Sabeth Siddique.
Thank you very much. Can you hear me? Great. Yeah, I'm a banker and ex-regulator, so I feel like a bit of a dinosaur here. But the topics that I heard today were extremely eye-opening and fascinating, and validated my view about the opportunity in the banking industry. So before I start my presentation, I thought I'd just give you a little bit of context of what happened, an event that happened right before the financial crisis that will hopefully give you some context about the opportunity that exists using AI and the technology that's emerging. So in 2008, there was really a philosophical debate, or 2007, I believe, philosophical debate of whether the subprime crisis was well contained or not. That was something the Fed actually published, and to keep the market calm, saying, don't worry about the subprime market, it's well contained. Well, I'm on the West Coast, and as I came here, I reminisced about what happened back then. I had asked in 2007 an analyst to call one of the major companies here in the West Coast, find out what's happening in the market, in the mortgage markets. And I said, I'll join you in a few minutes. Call this company up, and I'll join you in 10 minutes or so. So I joined my colleague in 10 minutes, and who was on the phone was the CEO of one of the largest mortgage companies in the country. So I put the phone on mute and I said, why did you call the CEO to describe the analyst, to describe what's going on in the market? The analyst told me, well, the CEO wanted to be here and he wanted to go through and explain our questions. So he was very patient, and at the end of the discussion, he said, did I answer all your questions? I said, yes. Well, Mr. Siddique, I now have a question to ask you. And I said, what's that? Basically, he described one of the biggest pullbacks in liquidity the country had ever seen. And right after that incident, a few major investment banks and global institutions failed. So that was right after that incident, the debate about whether the mortgage crisis was well contained or not was over. But the consequences of that was a massive distrust between regulators and bankers, because all through this time, the bankers were saying, don't worry, things are fine. Believe us, everything's under fine. When the regulators said, show it to us, show us why it's fine, they were unable to show the data to do it. And so let me go to the next slide. So this massive distrust after the crisis, all of you probably heard about the Dodd-Frank Act. This has over 400 rules and 22,000 pages of regulations. Just to give you a sense of the burden that this has created in the banking market, one of these rules it requires almost 20,000 pages of output for a bank to meet the regulatory expectations. So the speaker earlier talked about the tremendous manual requirements, data requirements. That's what's required to put just one of these rules together. And there's 400 of these types that the banking industry has to deal with. So the cost to this for the banking industry is not minuscule. The direct cost is about $10.4 billion per year. And it's increasing, and it's not only those direct costs, but there's indirect costs of hundreds of billions of dollars a year, because this type of burden to the banking industry is crowding out hundreds of billions of financing opportunities in the industry. And so the banks are really struggling right now of how to deal with this situation and how to make the financial system more efficient. So this is a perfect time for RegTech. I was reading that there is 130 billion downloads per people are making on the apps. And I feel that type of activity is really missing in the banking activity, taking advantage of some of the things I've heard about this morning on quantum technology. I thought about the person talking about the chip, and in hindsight, I think if bankers had a chip on their brain, probably we would have avoided the crisis. But that type of technology hasn't quite arrived in the banking industry, but it is ready to actually do this, because the huge amount of manual work needed to put together these regulatory requirements is enormous. And there's a lot of manual work there and huge amounts of data that needs to be put together. And embedded in this information, all this information, is opportunities of not only to become more efficient, but how to introduce more products and services to the industry overall. So a number of firms have tried to do something about this. But from my point of view, as now a banker in the industry, I feel that what's been happening is the panelists that were talking earlier today related to Sand Hill, they talked about two characteristics, traction and pedigree. And Lenovo, along with ERA, has really created, in my view, good traction and pedigree in using a very flexible, non-invasive system. They've been able to cut my costs by 50%, increase the output, the speed at which I actually produce those 20,000 pages. It used to take 3 weeks to do that, to run actually one section of that. Now it takes 1 day. So the speed at which they've been able to do that. And they've created a process that's non-invasive. So what happens in traditional technology solutions is that they come in and they come up with an architecture, and once the architecture is determined, they have to figure out the hardware, and by the time that's all done, it's 2 years, and it becomes outdated. And you really don't get the business solution you're looking for. So I'm not a technologist, but working with technology people in multiple various companies, that seems to be the way that they've worked in the past. And what was done recently by Lenovo and ERA was a non-invasive process where they did a software overlay over legacy systems using recent legacy recent technology in natural learning processes and deep learning, and delivered what I wanted within a few weeks, and at a very relatively cheap price. So I'll end with that the opportunity in the banking industry is quite large, and there are examples of how one can take advantage of the opportunity using the technologies that I've heard of today. Thank you very much.
Thank you, Sabeth.